Alibaba, the mammoth Chinese internet company, filed for an IPO that will end up being one of the biggest in corporate history, maybe the biggest. But is it a good bet for investors? To help answer that question, we welcome back James Gellert, CEO of Rapid Ratings. James, good to see you again.
Good to be back, Paul.
I assume that you heard a little bit about this Alibaba company, right?
Came up somewhere.
It came up somewhere, yeah. What is your take on the company overall? Your financial health rating is pretty high, right?
It is. It's rated a 76, which compares very,
out of 100.
Very well. Out of 100.
Right.
It compares very well to it's ahead of Google. It's ahead of Apple. Certainly ahead of the internet commerce and the social media names that we've been talking about for a while.
Right, and it's interesting. This company, yes, they're doing their IPO now. Yes, maybe a lot of people here in the States aren't that aware of them, but they've been around for a long time. The numbers are really big on this company in terms of sales and profits, how much cash they have. I mean, this is a mature company.
Well, I think that's a very good point. It is a much more mature company, and therefore investors have a lot more track record to be able to take a look at, to be able to see how the company has matured, the kinds of businesses it's growing into, and from a financial health perspective, our ratings allow one to dive a lot deeper to understand exactly how it is that they're creating efficiencies. And this is a company that is creating a lot of efficiencies.
Right. So very low risk of default, basically, is what that talks about. The interesting thing to me, and we were doing the live blog yesterday, I was going through the filing, because of the rules on foreign ownership in China, because of what they have to deal with in the regulatory situation over there, they have a very scattered ownership structure.
That's true.
Walk us through it a little bit, because it is convoluted.
Well, it's convoluted, and I think the ownership structure and the corporate governance are really the big issues that that people are going to need to dive into. When one invests in a company in a normal, let's say a U.S. IPO, you're buying a share, you've got an ownership interest, you have a vote, and that vote allows you to help control what the corporate governance is, who will be on the board. In this case, it's very different. In this case, there is an original group of 20-plus people, including Jack Ma, the CEO and founder, or chairman and founder, and they will still have control over the board structure. They will still have control over the major operating decisions of the company. So it is different, and this is one of the things that I think the market really will be very focused on, that and all of the other basket of issues that come with investing in a Chinese company.
Yeah, that is interesting. I mean, for U.S. investors, and we're going to talk about this with Paul Christopher and Wells Fargo in a second too, for U.S. investors investing in a Chinese company, what do you really need to keep an eye on? I mean, it is not the same as investing in a U.S. company.
No, for sure. And I think the problem is we don't really know.
Yeah.
And a lot of people invest in the Chinese IPOs thinking, we know that there's a lot we don't know, but it'll be okay. And that may be the case, it may not. There are a lot of, when you go through the risk factors in this filing, you see there are a lot of issues. Intellectual property protection, regulatory changes, taxation on the commerce providers, the vendors that are going through Alibaba. There's a lot that we don't know, and there's a lot that really no one's going to know until it happens. And that's just a major risk anyone has to get comfortable with when investing in Alibaba or any of the other Chinese companies.
Yeah. All right, let's leave it there. James Gellert, thanks for coming in today.